Retail investors' biggest problem is they understand price, but they don't understand value. This line is from Ramdev Agarwal, co-founder at Motilal Oswal.
Retail investors' biggest problem is they understand price, they don't understand value.
And if you understand this one line properly, your entire way of looking at stocks will change. Because price is easy, price is visible. A stock is up 20%, down 10%, near 52-week high, 52-week low. Everybody can see that. But value is not seen on screen. And in this video, we are going to analyze two such value buys. Both of them have corrected, both are looking attractive. And in this video, we are going to apply Ramdev Agarwal sir's idea of price versus value to both the stocks. See, according to Ramdev sir, value is hidden in three places.
Business management and valuation.
First, quality of the business. Second, execution of the management. And third, the valuation at which you are buying the business. So in this video, we are not going to waste any time asking that stock is down, let's buy. That is not investing. We are going to do a proper analysis with targets, with buy zone, and I am also going to show you how research firm find the targets for the stocks. First of all, every investor should understand that if you know these 3 points and if these 3 points are right, then you can make money in any good stock. But even if one of these 3 points are weak, then even a famous company can become a disappointing investment. Now let's start with the first stock, and Ramdev Agarwal sir himself talked about this stock, Mahindra and Mahindra.
I can see a lot of, say, even automotive giants like, say, Mahindra is available TTM 22-23 times.
Now, most of the people think of M&M as a tractor and SUV company. Now, that view is not wrong, but it is incomplete. So, the real change in M&M is this. It is no longer depending on only one engine. It has SUVs, tractors, light commercial vehicles, electric SUVs, financial services. It has tech Mahindra. And it has something which the management calls growth gems. And all of this matters because the market gives better value to companies where the growth is not dependent on a single cycle. And this brings us to the first test. Is the business good and is it growing? Yes, it is. In FY 2026, M&M's consolidated revenue grew 25% year on year to around 1,98,639 crore, and consolidated PAT grew 35% on an adjusted basis to around 17,099 crore rupees. So for a company this size, this is not normal growth. That is meaningful growth. And M&M is already number one in tractors with around 43.6% market share. It is number one in LCVs below 3.5 tons with around 52.3% market share. And in SUVs, its revenue market share was around 25.3%. And that brings us to the first tension in the M&M story. Is this growth truly sustainable, or are we already looking at peak optimism in this stock? And is the market sensing it in advance and correcting before the slowdown becomes visible? This is where the capacity and the EVs become important. See, M&M's SUV problem is not weak demand. In fact, in many of the models, the demand is much higher than the company's supply capacity. So when M&M is investing heavily in new capacity, EVs, product development and new plants, they are not just spending huge money for show. They are actually increasing the production capacity to reduce the waiting period and convert that strong demand into actual sales and revenue. Now EVs are even more interesting. The company reported around 55,000 SUVs sold since the launch, and FY26 BEV revenue was around 14,389 crore. And more importantly, the BEV business reported positive PBIT including contract manufacturing. Now this is where many investors miss the point. In EVs, selling vehicles is one thing, but making money from EVs is another thing. See, many companies can grow EV volumes, but if every vehicle sold increases the losses, then the shareholders do not benefit. And Mahindra's early EV numbers suggest that the company is moving from concept to commercial execution. Okay, but that does not mean there is zero risk. There is risk. EV scale up, new capacity, LCV launches, all of them require execution. So, this is not a zero risk story. But here the difference is that in M&M, the execution is already seen in the current numbers. Now that brings us to the second test, management quality. In auto businesses, the management quality is not judged by the speeches. It is judged by the capital allocation. Like, can they launch the right products? Can they expand the capacity without destroying the margins? Can they invest in EVs without damaging the balance sheet? So in M&M's case, the evidence is positive. Consolidated ROE reached 20.1%, which is above management's through cycle target of around 18%. And the company is investing aggressively, but the balance sheet still looks comfortable. And performance is coming from multiple segments and not just one lucky pocket. So for M&M, the management test is not perfect, but it is strong. Now comes the most important part, valuation. And this is where retail investors make the biggest mistake. See, a stock becomes attractive when there is a fall in stock price combined with improvement in business value. And this is exactly why M&M deserves your attention. Now see, as per NSE data, M&M was trading around 22 to 23 PE and the stock was down around 20.9% year to date, roughly flat over 1 year, while the earnings had grown strongly. On top of that, from its recent high, the stock is now available at around 23% discount. So if the stock was falling because the business was deteriorating, then this correction would be a warning sign. But here the situation is different. The price has corrected, time correction has happened, but the earnings have expanded. So the valuation has become much more reasonable, not because the stock has simply fallen, but because the business value has improved while the market price has cooled off. Now, if we look at the technical setup, then M&M is also near an important support zone of 2,881 rupees. And this level is important because it acted as a support earlier in March as well. And now again the stock is taking support near this zone. So from a technical perspective, this is not a random level. This is a zone where buyers have shown interest earlier and the stock is again trying to defend that area. And the structure is also looking like a possible double bottom formation, which generally indicates that selling pressure is reducing and stock may be preparing for a recovery provided the support holds. So that is why from a long term perspective, I am bullish on M&M. So as an investor, I would start building position near the 2881 support zone, but I would not put the full quantity at once. The better strategy would be phased accumulation. First, start building position near the support, and if the stock crosses 3360 resistance, that will be an important confirmation level, and at that point I would increase my position and double down. And from current levels also, based on the research note and valuation comfort, there is still around 30% upside potential left in the stock. So the rating is long term buy or accumulation on correction, and I want to be more sure. So 2400 rupees is the add more zone. In case the stock falls down, then this is the zone where I will buy more in bulk. So overall, according to me, M&M is a good long-term opportunity. Why? Because the business is growing, management execution is strong, and the valuation has become reasonable. And this is exactly what Ramdev sir means when he says that retail investors' biggest problem is that they understand price, they don't understand value, and value is important. Now there is one more stock which comes under the same category, but if I analyze it today, then this video will become too long. So let's do one thing. If this video gets 500 likes, then I will do a part 2 of this video. In that we will also analyze Ramdev Agarwal's portfolio, his investing strategy, what all small and mid cap stocks he is holding in this portfolio. So if you want a part 2, then definitely like this video. So this was Sanika from RangaOne Finance, and I will see you very soon in the next video. Don't forget to hype, like and subscribe to the channel. See you soon in the next video. Bye bye.